The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 13th terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential is something that we must master each and every day. So let's begin with an empowering belief or two. This one from one of my favorite books, The Art of War. You know, I heard Larry talking about it on his show. I think it was earlier this week. Maybe it was late last week out there. You should get this book, folks. So let's take a look at some of these great beliefs from this book. First one, listen to this. Appear weak when you are strong, and strong when you are weak. Take a look at the markets that we trade, folks. Look at what the markets did yesterday. Did they appear strong when they were weak? Yes, and they are weak out here. We're seeing a bounce this morning, and we'll determine just how far this bounce is going to go. But appear weak when you are strong, and strong when you are weak. What a great way to live. Go back to some of those circumstances. I know that the worst decisions that I have ever made in my life, I can guarantee you, were when I was weak. And I did not act. I did not try to come from a place of strength out there. It absolutely was the time when I made the worst decisions. If you were ever like that, change your physiology immediately. I mean, whatever position you are in, change it. If you're sitting down, get up. Look. If you're looking down, look up. It's very difficult to be unhappy or sad when you are looking up to the sky. People that are unhappy or sad or, are fearful, I guarantee you they're looking in one direction. And it ain't to the upside. They're looking down. So maybe that's a little morsel there that you might be able to use. How about this one? If you know the enemy and know yourself, you need not fear the result of 100 battles. If you know yourself, but not the enemy, for every victory gained, you will also suffer a defeat. If you know neither the enemy nor yourself, you will succumb in every battle. Folks, this means you must know how to identify the bulls and the bears in the marketplace. Candlestick charting, that is one of the best tools because it will help you to be able to read the message of the market, see where the battle lines have been drawn, and when they get crossed, you can know that who won that battle, and that'll be helpful to you because you're going to understand where are the other lines of either support or resistance out there. That's all that's going on inside a stock chart here is nothing but battles of bulls and bears out there. Number 3, to know your enemy, you must become your enemy. Now think about how important that is in the markets that we trade out here. You must be able to look at each side of the trade. And that's key because when you set up a trade, that means you have identified if you're going long, you're identifying where your stop should be out there. If you're going short, you've also identified where your stop because you want to make sure that you become your enemy. If you're going bullish, you got to take a look at the bear side of it. Think about that when you are out there trading and investing. And lastly, this is one of my favorites here. Actually, it's not really lastly, but I will give you two more. Strategy without tactics is the slowest route to victory. Think about that. Strategy without tactics is the slowest route to victory. Tactics without strategy is the noise before defeat. Strategists, folks, they always slay the tacticians, but you've got to be both. Buying the dips or selling the rallies, that's a strategy. Then the tactician side of it is understanding A to B equals CD patterns or expansion-contraction patterns or market divergence. Those are the tactics. We must know both out here. And lastly, in the midst of chaos, there is also opportunity. Now, these markets, they go in both directions. We can certainly say that there is chaos. Chaos, we can just take a look at the volatility from the, yesterday was like a 269-point decline in the futures on the Dow from the top to the bottom out there. I would say that's a little bit of chaos out there. And, when folks are at one side of the boat, there typically is more opportunity that presents itself to the other side of the boat. We certainly have seen that in the U.S. dollar, Japanese yen currency pair. So we'll take a look at some of that chaos, try to identify where that might be headed to. Right now, we've got the Dow is up 2 points here. S&P about flat. Russell 2000 up 15 cents. NASDAQ is down about $4 and a change. Moving to the upside out here, let's take a look at it. We've got PVH Corp up $10 and change. MasterCard joining in on the gang here, up 1%. That's up $6. You've got Bello Corp up $3. Gannett up $4.40. Avalon Bay AVB is their ticker symbol. They're up a couple percent here this morning. Simon Property Group, SPG, up $2.66. Meredith Corp MDP up $2.40. To the downside here, you've got Google, Panera Bread right behind them off $3.51. Apple now down $2.46. You've got BlackRock off a couple of bucks here. Tesla Motors off $2 as well. Our call number is 877-927-6648. Let's go take a look at the indexes, see what we've got going on out here. Right now we're looking at the New York Stock Exchange. On the New York Stock Exchange out here, we've got net declining issues right now of 280. The New York Stock Exchange could come down here and test it's trading inside that last Thursday's swing point of June the 6th out here. That low is 91.37. So far, the low out here today is 91.73. If the New York Stock Exchange closes above today, 92.60.50, that will ensure that we will see a bounce in the marketplace. Where would that bounce head to? Well, in the New York Stock Exchange, the minimum bounce that we would be looking for is to get right back up to its most recent swing point, which will take you right up to that dead cat bounce area, the .382 level, 93.50 and change. The low of that swing point from June 10th is 93.27.15 out there. That is on the New York Stock Exchange. Let's go take a look at the S&P 500. Let's go see what she is doing out here. Traveling right now at 1613. Trading inside also that June the 6th swing point out here. What we can also see from a trend line standpoint, trend line a little different than channel lines. If we take a look at the trend line coming off of the low of November 16th, that would be our first touch point. Just use the next area, December 31st low. That's the black diagonal line that you see going across my screen. And folks, if you haven't had a chance to sign up for Bud Rolf's course this evening, do so. Even if you can't be there, sign up for it because it will be archived on your members page, and you want to learn from the channel meister out there. You want to learn from Bud. So do yourself a favor, go sign up for that course. A very small investment that you would be making in yourself, and those are always good. Making investments in yourself. We can see here the S&P 500 traveling down into that trend line. We can see that trend line held last Thursday as well. We'll see if this Thursday is going to hold inside the S&P 500. Where could this bounce to? Let me get rid of some of the lines out here. If we do see a bounce, well, really the same thing. It could get back up into that swing point, which is from June the 10th, anywhere from 1639 to 1648. That would be a logical area. Could even get into the area of about 1661 to 1648, which would be May 30th out here. Expect it to really find some major resistance if there is a decent bounce that can unfold here right at the low of 1648.86. That is your May 22nd area. And that was that was basically tested, very close to being tested on June the 10th out here. If in fact the bears continue to push this market lower, where will the S&P move to? Just like we want to take a look at both sides of the trade out here. The next move down is to the .786 level. That would take you to 1568. Now, why is that so important? Oh, my goodness. What does that bring back into play? 1576.09. Let me move this up here. 1576.09. How about that? Remember that? We used to talk about that, what seemed like every single day for so long back in the, what time frame was it? March, April. Finally broke out above that on April the 10th in 2013. That is your swing point that goes all the way back to November 11th, 2007. You break above that area, it's coming back. That's going to be the area that's going to be key for us to be watching, because when you break back below it, especially if it does it with some conviction, then it would say that this move to the upside was a false break, at least inside the S&P 500. It'll need all the other indexes to tag along, and they've got much further to go to get back to their 2007 swing points out here. But 1576.09 may not be today, although we're talking about today. So we'll just say it may not be tomorrow, but we will be talking about it because the market does want to pull back to at least its 200-day exponential moving average, which is just a normal target inside the unfavorable seasonal cycle, which we are in right now. So that's on your S&P 500. Let's go take a look at the NDX 100. The NDX has that hammer candle out here, so the NDX is going to be important for us to be paying attention to because that hammer candle is what formed last Thursday out here. Only did about a little over a 40% retracement out here. So the low inside the NDX, the low of June the 6th, 29.11.94. Let's see where the NDX has gotten down to this morning, 29.14.20. Hasn't tested it, but it's inside this hammer candle. Let's see, we are 5 days into it. There's a course that I taught. In fact, if you are a subscriber to my newsletter, inside what you want to do is inside the expanded edition. Folks, my newsletter contains a daily summary that's usually about 10, 12 easy reading pages because what I lay out for you is exactly what the markets are doing, the charts, and it offers you opportunities to take different trades, take a look at multiple things, currencies, whatever's pertinent at that moment. And that's in the daily edition. And included in the daily edition are some important links to things. And one of those is a link to a index of about 40 hours worth of education I put in there. So go in there and look. I teach you how to buy hammer candles, and it's very important during the days 3 through 8 out there. So go check that out if you are a subscriber, and if you're not, you can test drive that for 30 days. Comes with an unconditional money-back guarantee and access to me whenever you need to give me a call or send me an email and ask me a question about something in the marketplace. Right now, we got the hammer candle. If you close below it, if you're long, you're wrong. So it becomes pretty easy to trade the NDX 100, quite frankly, because if you get a close in the NDX below 29.11.94, you are wrong on the trade here. Now, what the NDX is also doing here this morning, it did it last week on Thursday. It's testing that all-important May 2nd gap up area. So this has proven to be an area of support. Today is actually test number 2, which is important. You test a support area, what I'll call a gap up area 3 times, that all of a sudden becomes it becomes very significant, and so we've got test number 2 going on. So a close below that hammer candle, that would set up a move to where, because it's only done a 40% retracement out here, that would set up a move to one of the retracement levels, which would be Sweet 618, 2854. 2799 would actually be in the cards out here because that would be the 0.786 level. But when I take a look at this, it's really at 2854 area where if the hammer candor fails, and it will. I just don't know that it's today. I don't think that it's today, quite frankly. But when that does, whenever it does, 2854 is really in the cards. You've got some other swing points out here from April the 10th and April the 11th. Those are at the highs of about 2862 out there. So you get a close below 2854. You know what? Say goodbye to Sweet 786. The NDX will go all the way back down to the April 18th level. We will see that happen. I just don't think it's today. 877-927-6648. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's see. The Dow's up 12, S&P up 2, composite just slightly flat here. Now, the New York Stock Exchange is up 21 points. That's the leader in the clubhouse, folks. That's important because the New York Stock Exchange has been the weak link out here. So did you hear what I say? I said the New York Stock Exchange is actually the leader in the clubhouse and actually has it's really flat with regard to net advancing issues out here, but it is the leader. So I'm going to go back. I don't do this too often, but I'm going to go back, and we're going to go ahead and put a trade together here for those of you that actually want to go along the NDX 100. Since we were taking a look at that hammer candle, that becomes an easy trade out here. We're looking at the TQQQ. It also had a hammer candle last Thursday, and the low of that was $67. So far, it's gotten down to $67.15 out here. So I'm going to go ahead. I'm going to so I'm going to first mark down a couple of things. So 68.11 is where it's trading at right now. What you can see that I've also done, I've gone from the top to the bottom. The top being the May 22nd swing point. And so our first target on here is really going to be the 618 level, 73.44. So we'll see if this sets up to be a possible good trade, a good reward to risk trade out here. Now what I'm going to do is one of the tools that my subscribers, my clients have access to. In fact, if you haven't test drove this, you can gain access to this on the homepage of TFNN.com. Go over on the left-hand side. You'll see a little button up and down there, and if you click through it, you should be able to see this. So we're going to put in TQQQ. That's the 300% of the Qs out here. And that's really what it is that we were looking at, the pro shares. So we're going to go long here. So I'm just indicating it's a stock, actually a stock index that we are trading. And then we're going to go long bull. Now, what you would put in here is you put in your trading cap. I like to just put in quantities of $10,000 out there. It makes it easy to add or subtract or what have you. And let me just try to blow that up on the screen here, make it a little bit easier for you to see. And this tells us that our average true range is $2.83. And that's really important to understand when you're getting into a trade out there. You don't want to enter a trade and just get knocked out because your stop was so tight and you were just inside the normal volatility. So I said our entry price would be around 68.11. I think that's what it was trading at. And our our first exit price would be out at 73.44. So if I hit my calculate button here, and you can see down below here, it gives you what the average true range calculation was. So this would require 15% of our portfolio. It would only give you a 1-to-1 reward to risk. So maybe it's not the 1.618 expansion that you would need for your stop. I'm going to change this to, and I like to use a expansion number like 1.272 would be good in this instance here of the true range, because we're up against the back of that hammer candle. So I'll just recalculate the button. And for our first target, it would be still only about a projected reward is really only 1.5 to 1. So you may not want to take that trade out there inside this, but that was really just our first target out here. What this does tell you, folks, it tells you how many shares you should purchase, exactly where your entry price is, your stop, and it's a hard stop. It tells you exactly what we're using. You're only risking 1% of your working capital, although that means when I say 1% on $10,000, you're only risking $100. You're required, it's going to cost you 19% of your allocated capital in order to be able to buy that out there. But if you haven't used the position size calculator, please do yourself a favor and go do that. It's the key to trading, is understanding your position size. It will help you from over trading the marketplace. And so you can check that out. It comes with my newsletter service, or you can test it for 30 days if you have not already, over on the left-hand side of the TFNN homepage out there. So that was on the TQQQ out there. Now, your next target could be 75.19. So we could actually go back into that. I won't, but you can go back into that. You could change that. So 75.19 could be game, even 77.42 on a bounce out here. Again, New York Stock Exchange, that's up 23 points out here, up 0.25%. That is the leader in the clubhouse out here, and the New York Stock Exchange really has been the weak link in the market. Now, let's go. We'll go ahead and wash that off of the screen here. Let's take a look at the Dow. The Dow trading into the June 6th swing point out here. Nothing really to provide us with any information other than today. If you get a close above 15.040.62, it's trading at 15.013. You will have a rejection of that June 6th swing point. But let's go take a look at the trannies out here. Let's take a look at the Dow Jones Transportation Index. I haven't looked at that here for a few days, and let's go see what it actually is doing. And like we were taking a look, I'm going to blow this up on my screen here so you can follow along a little bit easier here. What we're taking a look at is inside the transports. I'm going to come take a look at the gap. Well, you know what we're going to do? We're going to do that when we come back from this break. But what we're going to look at is what is being tested here this morning inside the transports is the gap up that it had on June the 7th. And so far it's holding. And that's an area of support. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 28 points. Leaders still in the clubhouse. Doesn't look like there's going to be any leaders in the clubhouse at the U.S. Open today, as they're dealing with some torrential rains, I believe, up in the Philly area. New York Stock Exchange, however, in the stock market, they are the leader in the clubhouse, up 0.3%. We now have net advancing issues, 269 out there. And remember, the New York Stock Exchange, actually, that has been the weak link in the marketplace. So bounce-a-roo is underway. Now, let's go take a look at the transportation index. What I did was I switched over from the actual trannies to the IYT for you. That way we can take, because it's one and the same out here, so that is the ETF for the transportation index. So let's go see, in fact, what it is doing out here. And it's doing really the same thing. So we're taking a look at today's action. First, let's look at yesterday's action, because that's really more important here right now. So in the move down yesterday inside the IYT, it came down with 192,000 shares. That was going out against a breakout of 1 million shares. Yeah, maybe you didn't hear me. Let me say that again. Yesterday on the move down, 192,000 shares going against a breakout of 1 million shares out there. So this morning, all that it has done, what it did yesterday also, it tested the bottom of the gap, which was the June 7th low, 111.15. Tested it on lighter volume. You closed back above it yesterday, 111.30. Today you have tested it as well. You have a nice 0.618 Gertley buy pattern out here, quite frankly, that set up right down here on June the 6th. And now, inside that Gertley buy pattern was a breakout. and the breakout inside the IYT was tested. So just so we were taking a look at the TQQQ. Now, if we take a look at this, the IYT actually out here may be even the better trade, and a better trade because you've the Qs, that was a good trade because you were up against a hammer. So being up against a hammer low, that makes it real nice. Even though we used a wide stop inside the trade, if it closed below the hammer, you take a small loss and you get the heck out of Dodge. That's all. So you want to just that's my theory out there, making sure that you don't get into a trade and get stopped out because you put your stop so tight and it was just within inside the average true range of the day out here. So in the IYT now, this here can get back to the 114.22 mark, but really no big downdrafts out here off of the highs. No real big downdrafts out here. In fact, the IYT should get up to the 115.58 level on a nice healthy bounce. If we take a look at what the A to B, especially if we can get over the swing point out here from June 10th, that only has 379,000 shares. So if we take a look at what a confirmed A to B equals CD could look like on this, we'll go from the A point, which is last Thursday's low, to this. The B point was the swing that we were using of June 10th, and all the way to this morning's low. The 1-to-1 A to B equals CD takes you to 115.70. So in going back and taking a look at that, and let's go do that. Let's go ahead and pull that up on my screen here. Let's put the numbers. Let's assume you were to enter right now 111.71, 115.70-ish. Would be your one of your exits that you would be looking at. This is inside the IYT. So let me go ahead and pull that back up on the screen. We'll use the position size tool. Let me bring that back out here. So again, we're going to go ahead and we're going to input the symbol that we're going to use, IYT. Let the system go ahead and do a search. This is going to be an index ETF, long bull, $10,000. So for every $10,000, see, it automatically populated and gave you what your average true range was. You know, it's $1.86 on this. Let's assume you entered right around the 111.71, and our first target exit is around 115. So at 115, now 115.70. I'm not saying to take this trade, but I am showing you how you would actually go ahead and set this trade up. Now, you can see this thing came back and said it was a 47% of your portfolio would be required to take this trade, and that's why I use this selection here, this pull-down window. Is it a stock? Is it an ETF or what have you? Because I don't recommend that you put more than 40% in an index ETF. And so this way, in this case here, you can either narrow your stop, which I don't recommend necessarily doing, or what you can do is you can take your risk. You can take it from 0.1% down to you can take to 0.75. Just simply go down and recalculate. And your trade on this would be, you're only looking at about a 1.7% reward to a risk out there, at least with regard to the initial target. It would require 35% of your capital. Your position size would be about 30 shares for every $10,000, and that's how you would go ahead and use that. So that's on the IYT, but you can see here on the transports yesterday, they were not confirming the move down. And in fact, if we go over and take a look at the ETF structures themselves, let's go take a look at the Qs, the Diamonds, the IWM, and the SPYs. So we got the IWM out here. We looked at that actually during the last segment, not last segment, last show. So let's pass on the IWM. And the TZA out here. Let's go take a look at the actual Qs. And inside the Qs here, because I don't think we looked at this, so coming down in, into the hammer candle low. But yesterday on the move down into that hammer candle, 42 million shares going against 62 million shares. Just not enough to bust it down. And today, the low in the Qs, 71.55. The hammer low is 71.47. But that's, you look to buy hammers somewhere around the halfway point of the wick, anywhere between the halfway point of the wick and the bottom of the wick out there. Those are your ideal areas. But still yesterday, and look, we are in a big corrective market out here. Absolutely. Now what we're really just trying to do is identify the places to come in on the short side. But the bears yesterday still couldn't garner up a big move, no question, 269 points in the Dow futures contract out here. But still, from a volume standpoint, falling short. If we take a look at the SPYs out here, yesterday the SPYs moving down with 177 million shares going against 200 million shares out there. Short, big time. So today, not out of the woods necessarily, just a little piercing candle inside the SPYs out here, but you close back above the June 6th candle, which is 162.74. Says you'll run up, you should at least run up to the 165.17, that level, that high volume May 22nd swing point out there. Ran into resistance. You can see the resistance, the red horizontal line going across my screen out here, and ran into that on June the 10th. Let's take a look at the diamonds, see what the diamonds did on the way downtown yesterday. On the way downtown, 6.9 million shares going against 15 million shares. That's like light by 45 or 50%, somewhere around there. So not enough to bust it down. That says now where can the diamonds bounce to? Well, certainly the bottom, same of that May 22nd area, 152.35 would be the range. What I really think is that if you take a look at your channel lines, and again, folks, Bud's going to have a incredible workshop this evening. He'll show you how to form those channel lines. And if we take a look at the now I've got 105. You can use any time frame out here. It just I don't really feel like redoing this, but we can take a look at the channel lines, the downtrend channel that the S&P is traveling within. And I'm going to have to redo this chart anyways as we roll over into the new contract. You can see here now we're up above the 0.382 retracement. I am long the ES Mini, so I'm going to, during the next segment here, I'll adjust my exit and my stop and just simply let the market go ahead and take me out. But the next target here is 1622 in the ES Mini. I suspect when we get up to that level that we will see some folks getting off of the elevator here. But it looks like, what this could actually do in the ideal setup, where your back would be up against the wall, is as this thing were to come into the top of the descending price channel out there. So we'll watch this. What we know to expect here is as the ES Mini gets up to 1622, to expect to get into some resistance out there, some turbulence, I should say, because it's a normal spot where you would expect to see some bears show up, or more so bulls like myself, maybe taking some of those contracts off of the table here and just, protecting some of the profits out there. Now, let's go take a look at some of the let's go peek in. We haven't done this. We took a look at the importance of this earlier on in the show, and that was take a look at the currency pair. Really, it's the euro-Japanese yen. Hasn't budged a whole lot here this morning. This has, and this is going to be key to be paying attention to, in my opinion, with regard to any bounce in the marketplace. Let's go take a look on that shorter-term time frame, the 30-minute, which set up two nice butterfly buy patterns out here. Looks like we saw just a little bit of a move lower. Remember, on the shorter term pattern out here, the shorter term 1.272 butterfly, it had a little bit of work to move lower into the 124.75 range. It got down to 124.95. Now we're talking. And so we want to just see this really complete the pattern. It's very close to it. The completion of this pattern on the 30-minute chart is going to be a bullish candle, which it could do in this next 30 minutes if we were to close above the level of, where are we at? The open 125.56 out there. But, this is just completing its task, which it needs to do. I actually like the mere fact that it made a lower low out here. And if we could see a little reversal sign right now, it would actually say we're off to the races. And, the New York Stock Exchange is suggesting that we're off to the races out here. So this is about just really trading the different patterns that are out here and coming back and stepping and taking a look at the chart and take a look at the information. It's not about being right, because all of these things that we're looking at and that I'm putting together does not mean that I'm right with regard to the bounce out here. I'm in a trade. It's at break even at this stage, so I've got nothing to nothing to really to worry about at this moment. But it was because of a number of different patterns that we're setting up, and the bigger trade is really going to be selling into this market. I just don't believe that it is today. So that's on the currency pairs. I mentioned let's also go take a look at those channel lines inside the U.S. dollar Japanese yen, because this is the beauty of beauties out here. You want to talk about taking a look at those descending price channels. This is the one that goes all the way back to 1998, folks. And you're just using the co-located open and close out here, the close of July of 1998. $1.98, the open, obviously, of August. And then your next areas of touch points are going to be your February 2002, believe it or not. And so you've got those as your touch points. Your next touch points out here are going to be February of 2007. And you can see price. What a nice ascent here off of the lows inside the euro. But right now, this is a monthly chart. We got a lot of time left in the month out here, but it is a nasty bearish engulfing candle out here, and it's going to be important to be paying attention to the close. This month, if it closes below 97.39, you'll have a bearish engulfing candle. Of course, the last time that the U.S. dollar, Japanese yen had made a similar type move off of its lows. In fact, let's just go measure it just for the heck of it. So from a high to a low out there that was inside this green box here. Let's come down here and take a look at it. And, we're very close to that move. Made a little bit of an expansion of that. The last time that it did that was all the way back here in 2007. You had that bearish engulfing candle, and then that just simply sent price all the way back down to the bottom of the price channel out here. So that is inside the U.S. dollar, Japanese yen. Now, if you come off of the swing point low from September 30th all the way up to the high that was put in here in May, what you can also see is you're really close to that 0.382 level, 93.56 out here. If it breaks through that area, 87.20-ish or so is going to be your range, and that would be sweet 618. Let's go take a look at the King, see what King dollar is doing here today. You've got the King moving down to a level of $80.50. The 0.786 retracement level is 80.13. You can see the King getting into the oversold territory. Last time it was at this level, we're back when it made its serious lows back in September of 2012. So if in fact the U.S. dollar index is making its lows, wouldn't bode very well to the commodities, gold, silver, light sweet crude, and so forth. We take a look at Goldilocks out here. You've got gold. Now, these yellow areas inside my chart, if you're looking at it, these are, now, I'd mentioned to you, the U.S. dollar has been tracking well with regard to the commodities, with the exception here of the last several trading sessions. In fact, the correlation has become unglued as of about June the 3rd out here. You can see the U.S. dollar index here getting weaker. That is moving up. I've inverted this to match the basically the moves inside the commodities, inside gold. We can see three other times here, just at least on the chart pattern, where we saw a inversion take place. But I haven't looked at it close enough to be able to say to you that the inversions resolve themselves in the direction of the U.S. dollar or what have you. I just haven't done enough of a study. I can tell you inside the Euro-Japanese yen, I can tell you that the divergence goes in favor of the currency pair. But I haven't studied it enough here. But we do have a divergence, a significant divergence, clearly. And with gold and silver not being able to make that move, even though the commercial traders are absolutely at their largest positions, all the way back to 2001 when the lows were put in. I do believe a low is going to be put in, but would sure like to see that bottom, that high-volume bottom out here inside gold from April 16th. Would sure like to see that thing tested, 1321.50 out there. Natural gas, that's setting up a nice buy pattern out here. Has further work to go, and that further work to go, ideally, it'll go into the bottom of that price channel as well. That's actually a trend line. That looks like a price channel to me. Look, because I see enough co-locate opens and closes. So looks like, and it will create a nice little Gartley buy pattern. That has a 1.618 expansion as well as a 0.618 retracement out there, right around the $3.60-ish range out there. We get back from break. We'll have about, 5-6 minutes left. We'll go peek in on the sectors inside the S&P 500. 877-927-6640. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's see. Putting some energy into the NASDAQ 100 right now. Regeneron Pharmaceuticals, Fossil Group, Alexion Pharmaceuticals, Biogen, BIIB, Altera Corp, NVIDIA, Celgene, Intel. Let's see. Putting some energy into the S&P 500, Gannett, Safeway, PVH, Cliffs, Edwards Life Sciences, Game stop out here. Inside the Dow, it is AT&T, Intel, Caterpillar, and Pfizer. Inside the New York Stock Exchange, it's Bello, Gannett, Lynn TV, TVL is their ticker symbol, Safeway, and Gray Television. Taking out of the NDX is Checkpoint Software, CHKP, NTAP, SanDisk, Microsoft, and Equinix, Randgold as well. Inside the S&P 500, Williams something, WMB is their ticker symbol. Electronic Arts, Red Hat, First Solar, Eli Lilly, Tiffany, Kinder Morgan. That's taking a little bit of energy out of the S&P 500. Taking some energy out of the Dow here this morning is Coke, Microsoft, American Express, DuPont, and McDonald's. And inside the New York Stock Exchange, the cash store, CSFS, that's down about 8% this morning. Ruckus Wireless, apparently they're having a little ruckus over there. That is down about 6% here this morning. Barnes & Noble, Gigamon, I believe that was an IPO from yesterday. That is impacting the New York Stock Exchange. Let's take a look here at the XLK, the technology sector, inside the S&P 500 and see what it has done today. It's got this nice little gap up there from May the 3rd, 10 million shares. It was first tested back here on June 6th with 14 million shares, so came back with volume for sure. Says that it would be back down there, and that's what we saw here yesterday, but lighter volume, 8.9 million shares. Today, we're seeing another test of that area, only 1.4 million shares. We are an hour and a half into trading, so you're seeing a light volume test of that May 3rd gap up area, indicating a strong area of support, and that was on the technology sector, the XLK. Let's go see what's going on inside energy market here. Of course, when we look at the XLE, we're really looking at Exxon Mobil. It's traveling into that May 3rd area. That had 14 million shares. Yesterday's moved down. Light volume, 9 million shares. Not enough to bust it out. Has not tested the top or the bottom here. But if it does close above today, 79.68, you'll see a rejection of a swing point, and it sets up really at least a move to the June 10th area. Not much of a move out there. That is on the XLE. Let's go check out the financial sector, the XLF, see what she is doing here today on its move down. Yesterday, coming into last Thursday's swing point, 64 million shares going into 71. So it was starting to pick up some steam there. Still not enough to really bust it down. And this morning here, testing yesterday's swing point low. That's all that it's done. It's done volume here of 20 million shares. So it's got some pretty decent volume here inside the XLF out there. So those are three top sectors. If we take a look at a couple of stocks here, maybe one stock, let's take a look at Panera Bread. That is apparently it's going to burn a loaf here this morning because it is off $3.84. Let's see if there's any volume behind the move. PNRA is the ticker symbol. I like Panera Bread. I like their Greek salads out there. And if we take a look at Panera, gap down this morning. Volume behind the move here, 140,000 shares. This thing has a little high volume, untested gap down area back in April 24th. Could easily move down into that area. 178 is the high, even Steven, and the low 169.58. Looks like it's taking out a little B point with 328,000 shares from last Friday, June the 6th. So Panera Bread not looking so hot. Folks, thanks so much for being here. Stay tuned. I believe Basil may be up next, but if not, we'll get a replay, I'm sure, of the 9 o'clock hour. And have a great Thursday. Look forward to seeing you tomorrow morning. Take care, folks.